Nikhil Khandelwal is also here with us on fundamentals. Nikhil, good afternoon. How are you looking at the markets right now, Nikhil, especially on the broader end? Is there appetite from your client community, mainly the funds, even at these levels, after some amount of correction has happened and froth has been cleansed out?
Yeah, hi Ajay. Yeah, definitely. In terms of the market over the last 10 days or so, post budget and post the global meltdown as well, there's been a sharp correction. I mean, beyond the markets, I think across stock specific. We have seen major corrections across even the larger names, across the indices. So that has actually provided a significant investment opportunity for a variety of investors, especially across some of the larger companies, leaders across sectors. So we have actually seen most of the investors lining up to buy most of the stocks, which are especially where the earnings clarity is very strong, or the companies are runaway leaders in their sectors. The fundamentals have not changed for those companies, so and some of the larger companies were actually trading or were trading at valuations which were much cheaper than their mid-cap peers. So definitely value was always on the side of the larger companies, and the correction has provided a great opportunity. So investors have been slowly and steadily accumulating, I would say more selectively than before. So net the flow remains positive across most of our institutional clients as well as some of our large HNI clients.
Okay, the realty index is doing fairly well of late, and given the kind of thrust that we've seen on the infrastructure space as well in the budget gone by, what's your view, and are there any stocks that you like within the infrastructure / real estate basket?
Yeah, I think in one of my discussions with you before, we've mentioned about the building infrastructure as well as the the road infrastructure being runaway performers as far as the market is concerned. Both on the building side, where we are seeing now the organized real estate seeing significant growth. We have seen companies like Godrej, Prestige, Kolte Patil, which are leaders across various markets, real estate markets in India. They have actually been seeing significant growth in their sales, and most of these real estate developers are being catered by private building contractors, like Capacit, like Ahluwalia, like GMC projects, PSP projects. So definitely the building infra companies are seeing significant growth traction across their order books, and as a result of the fast expansion in order book, these companies are actually seeing strong operating leverage. So among the building infra, there are 3 or 4 large players, and any of them all of them in fact are seeing significant growth in their order book build up. Secondly, on the road infra as well, clearly the NHAI order is picking up. As we approach the end of the year, by end of March, we see significant order happening from NHAI. Same is the case with state bodies as well. By end of March, we see significant order inflow happening. Within that, a trend which we have been mapping is more projects coming in the larger ticket size, and within that basket, actually the competition also starts to shrink. So within that basket, while L&T tends to get anywhere between 20-25% of such large orders, Dilip Buildcon has come up as a very formidable competitor in the EPC basket, of services, in the road infra space. So Dilip Buildcon, would, in our view, would be one of the biggest beneficiaries as far as the road sector is concerned. Another trend within the road sector which we are seeing is incremental orders coming through the HAM model, which is the hybrid annuity model, and within that, players like Dilip Buildcon are also taking a lot of projects on the HAM model. But a company from the Welspun group called Welspun Enterprises, which has today the largest HAM portfolio in the country, close to about 5,000 crores of orders. They are probably one of the one of the companies to look out for in over the next 12 to 18 months. So we are looking at companies which are able to bid for larger projects, are present across the larger EPC as well as the HAM model, and DBL and Welspun Enterprises tick the box over there.
Right, Nikhil, just one sec, we'll scratch that point a little further. There's an important breaking news which is coming in on Bharti Airtel from the wires. The stock is shot up 3% in trade. Of course, the news is that Bain is in talks with banks to evaluate listing the shares overseas. Listing Bharti Airtel overseas, probably that's the news, and the stock is gaining by 2.5%. We've seen a host of news come in on Bharti. Promoters have hiked stake. Then of course tariffs have been moving higher amidst overall very competitive scenario. So that's some incremental news coming in. But I wanted to, my next question to you, Nikhil, will be on Welspun Enterprises. That is one stock where we also saw a lot of domestic fund interest come in via block deals in the last couple of weeks, and you are also bullish on it. Have you interacted with the management? What's the outlook for this particular stock in your view, in light of how domestic guys are lapping this up?
Well, Welspun Enterprises, as I said, when the NHAI started with the hybrid annuity model of orders being instead of shifting from the BOT model, I have to say, to HAM model, Welspun Enterprises was the first to get the project, which is the Delhi Meerut Expressway, and they are actually completing that project in almost 13 months ahead of time, getting close to 55 crores of premium from NHAI for completing this project well ahead of time. And seeing the success of Welspun, now a lot of larger players have also started bidding for projects on the HAM model. Today Welspun has close to about 4 or 5 projects totaling to about 5,500 crores. The beauty of this model, and and why we like Welspun Enterprises in that context is that this HAM model actually is a fairly asset light model, wherein the company who's doing the project, who has won the project, doesn't have to do 100% of the investment. There is almost a 40% of the investment which is done by NHAI itself in the form of debt, and as a result of that, the balance sheet of the company remains very light, while at the same time the projects have to be completed on time. So at the same time, the NHAI provides the project, almost 80% of the project land has to be acquired and delivered to the bidder. So a combination of this provides a comfort that the company has that growth potential as well as a very light balance sheet, and in over the next 2 years we believe that the company can show almost 100% growth CAGR in this business.
Okay, request you to stay on with us, Nikhil, actually, because you were talking about infrastructure as a space that you're fairly bullish on. I want you to listen into what the management of NCC has to say. Joining us right now, we have Mr. Y.D. Murthy, the Executive VP. Thank you so much for joining in on the channel. To begin with, what's the reason for your margins around 13.8?